Gonna just get started. Good morning, everyone. My name is Dr. Susan Aronson. I'm a professor at GWU, and this is our monthly webinar of the Digital Trade and Data Governance Hub. And we would like to thank our partners in this endeavor, which include several institutes at GW, the Institute for Trustworthy AI in Law and Society, CG, the Center for International Governance Innovation. So welcome, everybody. And we're grateful for your time here. And before we introduce our two speakers today, we just want to briefly ask a favor of you, which is that GW has for the past 5 years done a metric of comprehensive data governance, and we're rethinking it. Michael?
Yep. So just put in the chat the link to our metric and our feedback form. We're really looking for, if they're missing any indicators, are there any strategies, policies, governance structures that you would like for us to include in this metric? Is there anything that we have that may not work? And is there anything that you just want to give general advice as we kind of revamp this data governance metric for 2025?
Thank you so much. Okay, so we're going to get started now. I'd like to introduce our two brilliant speakers, Dr. Lizzi Lee and Dr. Ran Gao. Oh, I think I've mispronounced it. Ran, correct me?
Rango, not the doctor.
Ran Gao.
Oh,
Okay, my Chinese is de minimis, but thank you for your patience. Who are going to talk about data assetization. Lizzi, please go first.
Well, thank you so much. And thank you so much for joining us for this session. I'm going to share my screen. I did prepare some slides, and please let me know if those slides are helpful. I'm happy to send them after today's talk. So just make sure. Okay, great. So here are the slides. So for my part of the talk, I'm going to start with an anecdote. At the 2024 Boao Forum, a group of Chinese journalists was interviewing Zhu Min, the former deputy managing director of the IMF, about China's financial market. But Zhu Min said something completely different from what they had in mind. Zhu Min looked straight at the journalist and declared, well, there's this one topic that you're not paying attention to. Start listening carefully. Zhu Min wasn't talking about interest rate or deflation or economic recovery. He was actually talking about an accounting rule change, which in his words would fundamentally change everything about Chinese economy. What was Zhu Min referring to? In August of 2023, China's Ministry of Finance introduced a rule that starting in the year after that, so in 2024, they would allow companies to officially recognizing data as an asset on their balance sheet. And Zhu Min went on to make an even bolder claim. He claimed data capital will surpass financial capital. The total size of data capital will surpass the total size of financial capital currently in the market. So that's kind of a striking prediction. Is it far-fetched? What's behind this? And why is China pushing data assetization? Well, people tend to view data as a byproduct of business operations, of government operations. But China is now treating data as a fundamental economic resource, putting it in the same category as land, labor, and capital. Well, the thing is, this isn't happening in a vacuum. Over the past few years, starting in 2022, China has accelerated this push and has methodically built the legal and financial infrastructure for data monetization. So Ren is going to talk more about the specifics, but I kind of lay out the 3 key policy milestones on my screen, especially as we talk about in 2024, the policy change Zhu Min was referring to. The Ministry of Finance formalized the data assetization, allowing companies to list the data as a financial asset. Well, the thing is, this is not just, empty policy talk. Cities like Shanghai, Beijing, and Shenzhen are already piloting their regional data exchanges, data-backed loans, and public sector data monetization. So I wanted to spend a little time sort of giving you in non-technical terms of how this actually work. How do you go from raw data to capital? How do you make data a financial asset just like real estate or commodities? Well, this actually happens in 3 different phases, each building on the last phase. The first phase is what I call data resource phase. At this point, data is still raw. It's collected from business operations, customer interactions, public sources. Data is largely unstructured and unutilized. And the real work begins when companies start cleaning, organizing, standardizing this raw information, including extracting duplicates, correcting errors, and reformatting everything to ensure consistency. And this is sort of the digital equivalent of refining crude oil to gas. Once it's processed, it becomes a potential asset that business can put to work. And that brings us to the second stage, what I call the data asset phase, where companies can take structured data and integrate it into their business model. And this is where data starts generating revenue rather than simply supporting internal operations. And companies at this stage can already monetize their data in 3 ways. Well, you can sell it outright, packaging data set and licensing them to other businesses, just like financial market data providers sell real-time trading insights, right? Second, you can offer subscription-based data-driven services, such as credit scoring, fraud detection, advertising analytics. So by selling data-related services. And finally, you can build your businesses around making products on top of your data, like AI-driven automation tools, predictive softwares, and machine learning models trained on your proprietary data information. So, for businesses, this transition from having raw data to having data assets is a game changer. But here at this stage, data is still just a high-value commodity. The real critical step is the final stage, the data capitalization phase. This is where data starts behaving like capital. Companies can record data as financial assets on their balance sheet, just like real estate or intellectual property. So how does this third stage differ from the second stage? Well, if data is recorded on financial balance sheet, then you can imagine that business is using their data as collateral to secure loans, just like homeowners take out mortgages on their property, right? Banks and investors can potentially underwrite data-backed loans, giving these companies access to financing based on the value of their data. Financial institutions can create data securities, asset-backed notes, kind of bundling together data-related revenue streams into tradable financial instruments, just like mortgage-backed securities or corporate bonds. And then we can talk about data exchanges and trading platforms, which are basically marketplaces where business can buy, sell, and trade data, just like other commodities or financial resources. Well, if China pulls this off, by the way, that's a big if. If China can, integrate data into the financial system, the impact could be pretty profound. One of the biggest immediate impact could be data-backed financial instruments. Imagine you're a AI startup, right? Now, if you can record data as part of your financial asset, you no longer have to rely solely on venture capital or equity financing to raise funds. So instead of giving up your ownership stakes, you could potentially leverage your data set as collateral. Use that to get loans based on the value of your data. So this could open up new avenue for financing innovation, allowing these companies to scale faster without diluting ownership. You can immediately see why this might be a important model for AI startups. As I said, this shift could potentially supercharge China's AI and automation ambitions, where we sort of see this confluence of data-rich companies and capital-starving companies. that also include machine learning, robotics, etc., etc. So that's so far away in the future. What sectors in the immediate future or years to come, I'm talking about within the next 3 to 5 years, could see more adoption? One of the most compelling applications of data assetization is healthcare. Here we're talking more, and not just patient records, billing information. We're also talking about clinical diagnostics, medical research, insurance underwriting, patient care optimization. And this is a sector that has a lot of government backing. If China pulls this off, this could well be among the first where data is recognized and actively traded within the regulatory framework as an asset. And on the slide, I put up some data on sort of the potential scale of this sector. If you add up all those sectors, the healthcare market could exceed 100 billion as applications such as AI-driven disease screening, predictive health analytics, and precision medicine gain traction. And also, because of China's aging society challenges, the government's push on silver economy, this could be a policy priority when it comes to data assetization. And also, transportation. This is another data goldmine. China has a vast transportation network, including streams of real-time data, highway traffic flows, logistic trackings, vehicle diagnostics, geospatial analytics that up to this point remain unutilized. So you can imagine car insurance, auto financing companies tapping into this information for underwriting, risk management. You can also imagine automakers invest in data services that could potentially help them optimize supply chains, enable predictive maintenance, and also power smart vehicle technology, which is also a policy priority. And finally, this is an interesting idea. China's local governments are facing a debt crunch. China assetization could potentially transform the structure of China's government financing. Traditionally, they rely on property market, right, land sales. But as real estate growth slows, China needs a new financial engine, and data could be it. If local governments can monetize public sector data, such as transportation, if they can provide a new revenue stream based on using those, assets as basically to boost their own asset holding portfolio, that could be a game changer for China's governance model, the financing of the governance model. But this transition will require a major shift in financial reporting and regulatory framework. And I think another sector that's primed for this is telecoms. Telecom operators in China, they're pretty gigantic. They sit on mountains of high-value data, from location tracking, consumer behavior analytics, to transactional and network usage data. So if they formally recognize data as an asset, these telecom giants could unlock entirely new revenue streams beyond their traditional data services and voice services. And they could, license their data sets to digital advertisers, smart city initiatives, or retailers who want, customer insights, data that these telecom operators have. And I think more importantly, if these telecom giants put data as financial assets on their balance sheet, that would strengthen their own financial portfolio and put them in a stronger position to raise capital and attract investment. That could in turn accelerate their investment in next-gen infrastructure such as 5G or 6G expansions, cloud computing, et cetera, et cetera. So that all sounds pretty good, but China's approach to data assetization also comes with risks. And Ran is going to dive deeper into the specifics, the mechanics of why this might not be as rosy as I just mentioned. One of the biggest challenges here is valuation. Unlike land, factories, or even intellectual property, data is intangible. It's constantly evolving and kind of inherently difficult to quantify. I think the major issue is the value of data is not static. It depends a lot on how data is used, who has access to it, and how data interacts with other data. So, without a reliable, standardized system for valuing data, China really risks creating a speculative bubble. If companies just inflate the value of their balance sheet by inflating the value of their data, that could be a regulatory headache. Another major issue, as you can imagine, is privacy and security. China is moving quite aggressively to commercialize its private and public sector data, but that definitely comes with serious ethical and social concerns. And finally, there's a risk of over financialization. If data becomes just another speculative asset rather than something productive, rather than something that drives real economic productivity, China could face the same pitfalls that have plagued other more mature financial markets, as we saw in 2008, right? So we talk about this parallel between mortgage-backed securities, and you immediately know sort of the inherent risks here. So the real question is whether financializing data will empower businesses to innovate and deliver true value, or simply inflate their corporate valuations. So it's not the tradable part of data that's important, it's whether they will be productive or not. And finally, I wanted to talk a little bit about the implications and what other countries can learn from China's experiment. Right now, the United States.
Well, I'm
Oh,
Lizzie,
sure.
I'm sorry, but you are way over. So
Oh,
what
sorry. I'm gonna stop here, and we can talk about
I
those
think,
more in
yeah,
Q&A. Yeah,
it would be great if you could do that. Okay, Rand,
perfect.
thank you.
Oh, so let me just quickly pull out my slide. Oh, I have to send a request to share my screen.
I would just stop sharing, and then you can go ahead.
So 1 second. Okay. Can everyone see the screen?
Yes.
Amazing. So, in my 10 minutes, I'm going to focus on 3 questions. What does this policy, data assetization policy, do in theory and practice? Why is China adopting this policy, like the rationale and incentives behind it? And is this policy actually of any good in the status quo and in the future? So let's jump ahead into the first important part of everything. And let me begin with a clarification that not all data in the status quo in China can be considered as assets according to the interim provision on accounting treatment of enterprise data resources, which is like the key accounting document that sets forth all those data assetization practices that we see in the past year. In this interim provision, it outlines 3 key criteria for data assets to be, for data resources to be classified as asset. Companies must demonstrate legal control or possession of data. The data asset must be expected to generate future economic gains, and the cost of developing those data products based on data assets could be reliably measured. Each of those 3 criteria would literally kick out a lot of the candidates for like candidate data sets that might be considered as resources. So this sort of stringent criteria, or like maybe not stringent, but um, these criteria will lead us to like the next key question. That is, what does it really mean for data to become like assetized? This to explain this question into detail would involve like a very complicated accounting analysis, which I won't go into today. But instead, I'll show you the roadmap in which a lot of the key Chinese policy makers subscribe to. That is the 3-stage oil analogy of data. I know it's not the best analogy of data in the economy, but this is one in which that's very interesting in China that a lot of the key people behind this data assetization policy actually believe in. So 3 stages: extraction, refinement, capitalization. In the realm of oil, the extraction would mean basically getting oil out of the crust, make it a crude oil. And refinement means crude oil to petroleum product, where all the value adds come into place. Capitalization, which is at the status quo a more far-fetched idea for data, is like very active in the realm of like oil and petroleum industry as a way to basically developing financing tools to grow the petroleum companies. And in the realm of data, extraction would mean basically gathering data from like individual users, collecting from industrial processes or purchase elsewhere, and perform basic data cleaning so that they will become usable. And refinement, as a courtesy analogy to oil, would mean basically transforming data resources to products such as large language models, algorithm, corporate insights or analysis reports that are of direct monetary value. And capitalization, which means basically developing financing tools for data asset would mean things like, well, developing bonds based on data assets, which are as a status quo is more of an idea rather than a practice. That's basically how a lot of the key policymakers in China conceptualize this like data economy with the oil analogy. And let's move on to the practice because the practice actually looks very different. There are indeed companies who actively participate in this data assetization practice, but overall, it's safe to say that the market is not very responsive. By the end of 2024, which is 1 year after the implementation of this policy, the total data asset like registered is still below like 0.3 billion USD, which is quite a small amount, shockingly, given how vast like China's whole like data market is as a status quo. And also another important indicator is how most of the companies registering data as assets are state-owned enterprises. As one of the researchers, Zhao Zhigang, succinctly will sorry, let me quickly move back to that. Okay, succinctly summarized, the listed companies are quite cautious to act. Central state-owned enterprises are slow to act. Local SOEs are rather proactive, and local government funding vehicles, which are state-owned investment companies, which are the most indebted at the moment, are the most active in participating in the whole process. While leading internet companies, the Tencent, Baidu's, and Alibaba's we think of are not participating in this whole process simply because there's no clear incentive for them to do so. They already have a viable business model to profit from their own data. There's very little need for them to seek for additional like finance by registering them in the data as asset. So here comes the incentive part. Why is China adopting the policy? The design is actually fairly straightforward. That China in the status quo face a really serious data island problem caused by, I'd say, two major reasons. One is the past contradictory policy makings that have largely made data sharing and like cross-border data flow a politically sensitive topic from 2021 to 2022. At that period when China's call for data security grew, well, the whole data sharing business becomes largely paralyzed or frozen, as one would put it. And the second cause is like China's corporate data management capacity currently does not stand at a level parallel to comparable to those of the EU or the US. There are a few models that the Chinese states use to basically like evaluate corporate data management, and in the status quo, very like the vast majority of companies stand at a fairly low level. The idea is that through developing high quality data products by allowing companies to seek finance through data assetization, this would basically develop a virtuous cycle in which data could be effectively integrated in China's vision of data economy, which is one of the very important parts in China's future economic planning. But the outcome is quite different. Indeed, there are some success in transforming the traditional businesses, the advanced manufacturing businesses, which have generated considerable data surplus in the past years, but have not been able to make use of them in the production processes. They have developed some good products to use to facilitate corporate decision making, and so on. However, it also comes with tremendous waste. Take an example of China Mobile's model, which basically predicts one's willingness to marriage by inputting one's phone number and all those for someone who wishes to get the data, you input the phone number of someone you wish to search for, and China Mobile is going to use a vast database to generate basically the results. That is the kind of products that's largely being criticized for privacy security risk, as well as like it's not particularly viable economic potential. The valuation process, however, is not an arbitrary one. Instead, it is very lengthy and confusing, including like various steps of external accountants, lawyers, data evaluate, like corporate valuation experts, which are all external. And it's such a complicated process that many leading private businesses are dispelled from participating simply because the cost of participating in the process is much more than, well, the benefit it could derive. And many, as I demonstrated in the previous slides, financing without producing has become a low-hanging fruit for many of the local government state-owned companies that are in need of urgent funding rather than having a sufficient technical capacity to develop high quality data products. So what are we looking at in the future? Is it going to be merely financial maneuvering, or is it leading to actual data-driven growth? I think there are 3 points that are important to make. One is that in the status quo, it is possible that China's current data assetization policy is a problem solution mismatch in terms of driving up high quality data products. There are structural reasons for that. Data valuation is surely very difficult. I'm pretty sure that the Chinese researchers have not found a good way to evaluate data assets amidst all those like academic papers they're publishing, and there's very limited commercial success stories. When I think about this data assetization process, I can think of some viable products, but not the like very high quality ones that really allow China to say, this is like the pinnacle of our data assetization practice. That's why I conclude it's a good way to catch up, but not break through for companies for states, for example, that lack stringent corporate data management criteria in the status quo, lack a funding market for data-driven products, or lack the basic like ideas or pathways, commercial pathways to make use of the vast amount of data surpluses they collect at the status quo. This data assetization policy could potentially serve as a reward mechanism to upscale corporate data management. That's because I think long-term success of this policy really depends on areas where they can truly incentivize companies. But in terms of generating high quality like data products or building up another DeepSeek out of data assetization, I think this is more of a far-reaching hypothesis or speculation that is unlikely to turn out in the reality. But the last point to end this whole 10-minute conversation with you all with is that China is actually also pushing for international, influence or standard building in the realm of data management. For example, the ISO 55013, which was published last year, which is one guiding basically data management of the management of data assets, was first pushed forward and in the status quo mostly practiced or experimented by companies and like institutes in China, would be one of those possible pathways in which China influenced global standard making. But it's also important to note that this kind of influence is probably not conducive to a particular form of government or kind of regime type that one might be in fear with in terms of the current geopolitical competition. So it's not something that we should politicize too much about. Instead, it's probably good to think about how the future global data management structure and landscape will look like with this very interesting experiment of the Chinese government. So thank you very much.
Thank you so much. You know, what stands out to me of this is in some ways it reminds me of DeepSeek in that you see a country that looks at its situation in terms of it has tons of data, but it's not accurate, complete, and representative data for many reasons, which we need not go into. But so what does it do? It's flexible and innovative. but it doesn't seem to be working yet, which is interesting. Rather than me ask questions, since we already have 3 questions, let's get started with that because our priority is audience questions. So first question to both of you is, how is the data actually valued and converted into monetary value?
So let me try to. It's a very complicated process, like in accounting, called expense or cost capitalization, which basically means, well, you you basically this. Well, let me use an analogy with a pharmaceutical and real estate market. So they have to basically develop a solid product, they need really strong upfront investment to before being able to generate returns of their product, their houses and medicines. As a result, in accounting, they basically calculate the tremendous, say, $2 billion in like spent in 2 years for developing medicine into the next 10 or 20 years, in which if their medicine gets developed, it's gonna be like it's gonna be like sure to generate return over that specific time period. So basically you expands the cost of developing the product into the 20 years in which it's expected to generate return. Similarly, in the realm of data asset, it provides a way to stabilize corporate balance sheet in the face of tremendous investment into building data product. Is that clear? I feel like
I think it's very helpful. I'm not sure how to read the next. It's more a comment than a question about how China is rating these database assets. I presume the person means valuing, and so I'm just not sure what to say here. Maybe this person can reframe it as a question. Next question. How do you think that Chinese policymakers could go further to make more companies more responsive and willing to do data transactions in the government-dominated data trading marketplaces?
So I'm gonna talk a little bit about my take. I think it's gonna start with strategic sectors that are dominant by state actors. So I talk about the example of telecom, I talk about the example of healthcare. So those are the sectors that the big players or government agencies are heavily sort of having a hand-in-glove relationship with the government. So the government definitely have more policy lever there. So, in the article we wrote for Rest of World, we talk about how there's this, political pressure for Chinese telecom companies to be the pioneers, to basically, incorporate data as part of their financial balance sheet. I think the same dynamics will work here. For example, in the healthcare company, right? The state-owned hospitals, they are probably going to be the first movers to formally put to assetize data for the healthcare sector. And once the state coordinate and the state sector leads, then if the framework works, if if we see some real value, real productive value there, then it's easier for the private sector to follow through. I don't think it's realistic to just use financial incentives so that a private sector will just buy in. That's always a problem. I think we're going to see this channeling, this seeding from government agencies and state sector before the private sector has sufficient incentive to be part of the project. And also, it's about risk control. If something goes wrong, China always prefer to have a fallback plan to retract. If you just open up to the entire private sectors, well, if something goes wrong, this could be a serious problem for China's financial stability.
let me just quickly up to that. I think Lizzie gave a fantastic overall summary of the process, and my perspective is that the state-owned data exchange is like a whole new topic that some people in the audience do great research about as Alec He, we just had the talk last week about it, and he published very interesting articles that you could read. But generally, I would say um, state-owned data exchange is one way in which China seeks to motivate data transaction. It also seeks to basically incentivize to regulate out of exchange regulations as well in terms of data. Because this goes back to how we conceptualize data trade, not just the trade of data sets, but also maybe semi-manufactured goods with data, like semi-developed large language models or semi-developed like consumer insights reports that are data-based. Are we conceptualizing all of those as data trade or just merely the trade and exchange of data sets? If we all include all those things, it's very hard to say we're gonna build an open marketplace to trade off that because it's more like they occur in a corporate supply chain with fixed partners that existed in a fixed like in a throughout a period of time. So I guess state-owned data exchange is one way to incentivize, but also the lack of trust of consumers and the lack of demand for also availability of high quality products is like the problems to look at. But that's a topic for another day.
There seems to be a lot of confusion about what kind of data can be monetized and how individuals' personal data, what role they play, because they didn't give direct assent to that data being monetized. So could you talk a bit about that, guys?
Sure. So in the status quo, the sort of data that's being most actively monetized are not personal information, but data gathered in the manufacturing processes or like business or industrial activities, such as smart water quality monitoring data, public transportation data generated by the government, or like very interesting example would be corporate water and electricity utility bill data, which could shed light on how companies are operating in the status quo. Are they like stopping like production, or are they producing very actively? These kinds of data could be generated for like credit reports and bank loans and all those kind of things. So they are currently most assetized. So that's like one example of the kind of
Wait,
data.
I think we need clarity as to exactly what kinds of data can be monetized. So if we were to go by type of data, which probably is not the best way to go, but for example, what's unclear to me, and it seems some of the people, for example, if DeepSeek scrapes the internet to get access to data for its chatbot, can that be monetized? Seems unlikely.
I personally think it's gonna be very difficult because it has to first justify like legal that the data are legally obtained. Normally, if it's personal data, you have to show the user agreement in which you get the users to sign before processing their data. And for other kinds of data, generally you say if you're a company trying to monetize the data, you have to go to the state-owned data exchanges to register basically the legality of the data, and then get a bunch of accountants, lawyers, and product managers to basically propose a model in which like a way to build up data product and demonstrate the feasibility and profitability of basically that data product. And then you find like an external corporate valuation expert to basically calculate the amount of the specific asset you're able to register. Largely there are different ways to evaluate data, but in the status quo, China mostly uses a cost approach. That is, the cost you spend to develop the specific data product would be equivalent to the amount of assets you are allowed to register.
Right.
Does that
And
make sense?
yeah. So I'll just add my quick 2 cents here. I see in the audience question, there's a question about how you actually value that data. So, in addition to what Ran just mentioned, the cost approach, I just wanted to mention one specific interesting case. This happened in 2023. So Hengyang in Hunan issued a public notice for a transfer offer, an auction for public data. Specifically, it's called Smart City and Public Data Transfer Initiative Project. And they basically, sort of derive the market value for the data by looking at the auction bids. I think the idea was, whoever bid the highest can take over our smart city project, and that bid kind of allows you to back off the data of the value of our data. But the project was, the auction was quickly suspended because the starting bid for that project was 2 billion RMB. And that just sparked widespread debate, primarily about the reasonableness of the price, whether there's any sort of real foundation to that value, et cetera, et cetera. And I think ultimately it sort of comes down to the robustness of the institutional framework to authorize data management, which is still very much lacking. I think what's lacking here is sort of this regulatory framework that should be reasonable, should be accepted, should be, on pace with international standards when it comes to corporate valuations, before we can sort of see further action in reality on how China is gonna push this forward. Just wanted to mention the auction model and sort of the controversies as a supporting example of the challenges Ren just talked about.
Thank you. Here's a question. I'm not sure I understand, but can AI chatbots be used to intercept and exfiltrate network data and other business intelligence, working as a form of psychological warfare using social engineering? If so, how valuable is it? It sounds like that wouldn't work.
I'm not totally understanding. I think it's probably more of a
Okay, I'm gonna
question.
ask that person to reframe their question and relate it to data assetization. The next question is related to, what about privacy? What role does that play in data assetization? But it sounds like it's, if it's corporate data, unless it's corporate data about an individual using machinery or an jet engine, it wouldn't be personal data.
Yes,
Is
and
that
if it's
correct?
personal, yes, and if it's personal data, it's like
Being
it's
anonymized.
it's integrated in the legality part. You have to basically demonstrate that the data is like legally obtained and like anonymized and so on to be able to get it into your assets or your balance sheet.
Here's another question along the same lines. Are we likely to see surveillance data show up in the marketplace? Will municipalities be able to package their surveillance data and use it as an asset to issue multiple municipal bonds?
Well, to be honest, I think surveillance data is probably the first among the kind of data that local governments, if they want to leverage their data resources to derive, economic values, it's probably going to be the first. Well, again, sort of the regulatory framework is key here. They should be fully anonymized before they hit the market, and also contractors who make use of the data. My sense is they're also gonna have government background, and there's more data security issues and privacy issues involved that should be sorted out before it actually hits the market. And just a meta comment here, I think we're really sort of seeing this divergence in approach here. I mean, when it comes to data, we know data is valuable, but China's policy focus is very much on maximizing the value, while The United States or Europeans' approach is very much on minimizing risks. And I think that's a kind of an interesting divergence in sort of philosophy when it comes to data assetization. My understanding is that the United States hasn't really fully explored how to integrate data into financial markets, how to treat data as an asset in practice, doesn't really have a policy framework to how to derive economic values from data. China is very focused on deriving economic value, but it doesn't really have a legal and regulatory framework in place to unlock the value of that data. So I think the two approaches are complementary in some sense, but either can stand on its own. There's some meta comment in response to that question.
That is, your comment is so important. You know, I found this is a study that's totally out of date, but I did a study of data strategy, national data strategy that looked at the role of data in the polity and in the economy. And there were two countries that stood out, Switzerland and Germany. And what you said was focusing on maximizing value versus minimizing risk is exactly right. That's how they thought of it. But one thing that you didn't talk about is the role of data as a public good. When you said simultaneously, essentially, it is a commercial asset. It can represent an individual or a group of people, but it can also be a global public good simultaneously. So how do you value that?
So I think that's a tremendously important question. And just as it's really challenging to value public goods, speaking as as someone who's trained as an academic economist, I think the same challenge is going to be more prominent when it comes to data. I would just mention a couple of things. First, in the United States, there are a few open data initiatives. I think the problem is they're very fragmented. I think for the United States, there's a real opportunity to build a more structured, more regulated public data ecosystem, to balance the economic value and strong privacy security protections. For China and US corporation, I'll just mention one specific area, China's patient and clinical data. We just here at A Society, we just did a webinar on China's biotech breakthrough. Part of the reason global pharmas are turning to China for drug discovery is because it's much more cost effective in terms of running clinical trials. So I think China has incentives or intention to start making its patient data kind of a global resources and for global healthcare sector to potentially leverage that data. I think that could be tremendous. It's still public good. As I mentioned, I think it should be when it comes to something like healthcare or cancer treatment. But whether that model will work, what are the lessons and sort of policy takeaways from that could further feeds into the other sort of data economic value derivations we talk about today. I'll just mention that as part of the ongoing discussions and negotiations between the US and China.
I think that's a very inspiring topic to chat about. I can think of two reference points. One is in terms of the sheer amount of data opened by the Chinese and the US government. China actually opens more than the US in terms of government data, public data. Well, that should not be surprising because given the sheer population and the size of government bureaucracy that China has. But the second, and also this has no indication the quality of data that's being opened. And the second on how to evaluate or determine to what extent the kind of public data should be considered as public good. The EU selects 14 categories of data as high value data sets and require basically the governments to open the data for free. I think it goes into how should a government open their data set to the people. I think China is trying to do it through a franchise operation model, topic for another day as well, but it's sold for a price. it comes together with a data opening model, which is China is sort of in between the two at the moment, but it's inclining more towards the franchise operation model in which all those data will be available for sale essentially.
Thank you so much for that. Okay, can you talk a bit more about how data marketplaces are currently working? What's the level of transactions? Who are the major buyers and sellers?
Sure. So I'll basically give a brief roadmap, and then Lizzie could quickly up to that if she feels needed. Basically, it's very fragmented. A lot of the local governments, provincial and municipal levels have their own state-owned data exchanges, trying to basically get all data they're trying to foster a form of ecosystem in which data suppliers, data service providers, and data demand buyers are in the same market, to which the kind of the data sets and products are being bought and sold, similar to, but this is a more comprehensive model compared to Amazon Data Exchange and Databricks Exchange that we see today in the international stage. But in the status quo, I think two main problems. One is most data, like 95%-ish, sort of data trade occurs outside of exchange. And second is that, well, the quality of products circulated are not good. So there's very limited high quality data sets available. And just quickly flashing back to the ecosystem point, they're not just places where data products are being sold. It also serve other purposes, such as, well, teaching data suppliers and corporations how to, well, make use or gather the kind of data, like teaching data collection to companies through a fiduciary model in some provinces, as well as registering data assets. Like if you want to register data as asset, you prove your legality and obtain your certificate at state-owned data exchanges. There's a quite it's more like a leverage point in which governments govern their data markets in general.
Lizzie, did you want to add anything?
Right, so I would just add two quick points. I think China is currently sort of laying the groundwork for data exchange. It's not fully there. I just mentioned two things. First, there's a level of bureaucratic sort of infrastructure that needs to be built. And we see China is gonna launch its first unified national data bureau this year. Hopefully that will provide more clear policy guidance and oversight and also standard. That's that. And also, interestingly, we just saw this major policy initiative coming out of China's two sessions, encouraging AI companies and tech companies to annote their data, standardize their data extract. I think that's sort of one way to basically go from raw data, go from crude oil to gas, to sort of standardize how we annotate that data. I would just add those two quick points. But still very much in the initial stage, and we're not quite fully there yet.
Yeah, I just sent a message in the group chat about a good piece on China's data exchange. I also have a forthcoming piece in the next month or so about China's overall strategy to develop its data economy. So stay tuned.
That's great. Okay, we have a few more questions. The legal control possession of data in the interim provisions on accounting treatment, does it refer to the right of data ownership or the right of data processing?
Sorry, could you repeat the first half of the question?
What is the legal control possession of data in the interim provisions on accounting treatment of enterprise data resources? Does it refer to the right of data ownership or the right of data processing and using?
The way China conceptualized is by separating the right of ownership and the right to basically profit from data. In the status quo, it focuses on the latter, but there's been huge debates about the whole ownership and the rights kind of thing, because individuals, there are people saying that individuals should have a right to profit from data. That's not there in the status quo in China and globally, I guess.
That raises another question, how so far, this is not so successful, but is China interested and trying to prod other countries to experiment in this regard, especially countries along the digital Silk Road?
Lizzie, you wanna clarify
Right.
that?
So in our rest of world piece, we actually talk about sort of potential, global implications, global adoptions. The short answer is, for the global South, China's model might be more attractive, but for Western countries, for U.S., for Europe, we don't see this as a currently not a feasible approach that can be easily extended. Ren, do you want to chat a little bit about sort of what's so attractive about China's model and how China's standard might have more attraction in global South, especially Brazil, as we talk about in the case in the piece?
Yeah, I think like in general for countries who are lacking a stringent corporate data management like standard as well as a vibrant funding market for data products, doing this like data assetization is not necessarily a bad thing. It's one of those viable, I think, possibly viable pathways in which like things to get things started. It's a way to catch up rather than a way to do breakthrough. By catching up, like you categorize data as asset, trying to develop some basic products and make use of the data surplus you generated, and maybe also incentivizing companies to improve data collection and like management because they're incentivized to do so because they might be generate like funding for precisely that reason. But for big tech and the like, I don't think that's like the best fit for them because they already have a good business model to start with.
Okay, do you want to stay for 2 more questions or does everyone need to go? All right, well, can data assets be sold more than once?
Can data assets be sold more than once? So this data asset is more of a, well, it's not something to be, so data asset could be used for 2 purposes. One could be sold directly. And if it's sold more than once, well, it's yes, in terms of like data service reports and the like, but no in terms of like if this is the model that you possess and you transfer it to others, then this is no longer yours. So yes and no. And the second to make use of data asset is to basically, well, develop a good product out of it. And if you do that, it's more of a strategy to stretch your spending over the next decades or so, rather than something you directly sell for money.
Okay. Lizzie, did you want to make any final comments?
I'm just happy to answer questions if there are anything else.
Well, I think we need to get going. So I want to thank both of our speakers who are really amazing researchers and awfully insightful about the implications. We really appreciate it. And speaking of appreciation, we would love it if you could comment on our metric of data governance for AI because we're trying to get feedback on it and we really need your help. Thank you, everybody. We'll be gathering again next month, probably to talk about AI action plans in the United States. And I hope everybody has a wonderful weekend. And please join me in thanking our really amazing speakers. Have a great day,
Thank you so much for
everybody.
the opportunity.
Thank you.
Bye.